back to another episode of the Think Successfully Room. This is the platform where we focus on building mindsets, we building character, bringing value to both you and your people, and aligning your body with your intelligence. I am your host, QB So Effing Amazing. And right now, I have a special person in the Think Successfully Room today. So if y'all watched the last episode, I had Onaji on the last episode. Onaji is actually responsible for bringing me in tune with Francisco Anderson, right? So I'm very big on financial literacy, and it's always been a thing of mine. Mainly because growing up in a black household, finances have always been a problem as far as mainly the black household. You know, I done had white friends, I done had Mexican friends, whatever race you want to name, but it was always financial issues going on in a black household. And that clicked at a young age to want to get financially literate. And I understood, like, it don't matter how much I study, I always need that mentor on the side. So Francisco is the guy that actually stepped in and began helping me take that step forward to a successful financial future for both me and the people around me. So Francisco, man, appreciate you for coming to the Think Successfully Room today, bro. Man, so before we get into it, man, could you just, for one, explain to us or tell us what got you into as far as becoming a professional financial agent and exactly what you was doing beforehand?
Absolutely. Well, first off, I want to say thank you for having me on the show. This is a lot of fun. It's always fun to be able to get out and about and be in the studio and hang out with you like this.
Man, I appreciate it.
And secondly, I'm glad that Onaji introduced us. You know,
Man,
that's
shout
fine,
out to Naji, man.
Big dude.
Yeah.
Awesome job, bro. All right. So, similar to you, I grew up, I got 5 sisters and 2 brothers. So count them, right? That's 8 kids. And I'm the oldest of 8 kids. And so I'm going to tell you something. There was never any money in that house.
Man, yeah.
I'm going to tell you. It's like our family was always broke. You ask for something, it's like, yeah, I'll think about it. Or they say that we going to do something and never get it done. So for me, growing up, I had to figure out a way to put money in my pocket. And I always figured out ways to do it. Mm-hmm. But, so finances had always been on my mind. So my background actually is field engineering, and then I went into technical sales, worked for a Fortune 500 company for 15 plus years, and I had a good time doing it. But I will tell you, I made good money, but at the same time, I still didn't have any financial literacy, right? I might have had the money in my pocket, but I still didn't know what I was doing.
Fact.
So what got me into this industry is really my brother had shared something with me some time earlier. And he had mentioned, hey, bro, I want you to take a look at this company. I think you'll like it, so on and so forth. And I looked at the company, I learned the financial concepts. And the financial concepts, had I known those concepts earlier, it could have completely changed how I handled money early on, right? And so money management was an important aspect in my life, and I needed the information for it, so I needed that education. And then I also had family members that actually died or passed away. And so the family had to pass the hat and all that. And we had that responsibility of, somebody had to put something in there, right, to take care of the burial expenses. And I just said, wow, I would never want that in my life.
Right.
And so that moved me to get into this industry. And some years back, I stumbled on an office in Rockford, Illinois. And I ended up taking over that office. I got licensed in the industry and became a full-fledged financial advisor. So this is what I do today.
Man, that's powerful, man. I actually want to comment on something that you just said about the burial and just funeral expenses. And I want to speak mainly to our community, man.
Oh yeah.
I didn't, because that's where I see the problem at. Mm-hmm. I don't never see that problem when it comes to any other ethnicity or race or whatever. But anytime we lose the loved one, man, there is never a time to where everything is just in play or money is just there to be able to give them a proper funeral. We always see we gotta sell these chicken dinners or these fish dinners or we gotta share a GoFundMe and it's kind of embarrassing to just us, because for one, that's just telling them that we don't have our life together financially.
There you
You know
go.
what I'm saying? If we can't even sit here and give our people a proper burial,
That's a problem.
that's a problem. That's a big problem. And we gotta fix that, man, which is why I wanted to bring you on this episode, because some of the things that's gonna be discussed today is gonna allow them to take what's being said and go do further research.
Absolutely.
That way we can begin, when we lose the loved one, we can begin giving them the proper burials and not have to scratch up money in order to do it.
Absolutely. You know, you said something about GoFundMe. I got to be honest with you. I'm truly at war with GoFundMe. I mean, seriously, you are literally relying on the goodness of other people to say, hey, would you mind sending me $500? So that I can go ahead and make sure that I put my loved one to rest properly, right? When really, all you had to do in the beginning was go buy an insurance policy. That's it, right?
Boom, bada bing.
Because here's the interesting thing about that. You get the GoFundMe, let's say they give you the money. That's the final expenses. You take care of that. That's all done. But wait, there's more. You got 3 kids at home that you left behind. You got a mortgage, right? You were the sole income earner in that household, right? And them kids still want to go to school one day. How are they going to do that? Is GoFundMe still going to be there?
Exactly.
Right?
Yes.
And so that's the necessity for insurance.
Generational wealth, y'all.
And it's, you know, so generational wealth is part of it, but it's also sustaining a generation.
Yeah, because it don't make sense. If something happened to you, if something happened to the breadwinner, you want to make sure that your kids are still taken care of.
That's right.
And still make sure that they're able to live the life that they were living before something happened to
that
you.
they were accustomed to.
You know what I'm saying? You can't. It's not fair to them
Not
that
at
they
all.
have parents that don't think the way that they should be thinking.
You know, they just make me think about there's a scriptural principle. I don't mean to go down this path too much, but 1 Timothy 5:8 highlights this point. A man that don't take care of his family is worse than a person without faith.
Man,
Now,
no purpose.
Now, interpret that scripture a little bit more, right? So when we talk about taking care of a household, yes, we take care of a household spiritually, emotionally, mentally, but now you got to take care of a household what? Physically, materially. So if you don't have $1 million sitting over in the bank somewhere, guess what? You need to have $1 million insurance policy for which you literally pay pennies on a dollar.
Man,
To make sure that security is in place. So when I talk to clients about insurance, I'm talking about debt payoff. I'm talking about income replacement. As an example of that, if a person's making 50 grand a year, 10 years of income, that's 500,000, 20 years of income. Wow, that's $1 million, right?
Yeah.
Just right there off the top. And then on top of it, you get into paying off the mortgage. Man, imagine the burden that you relieve from folks when you pay off that mortgage.
Speaking of mortgage, man, my apologies for cutting you off.
It's all good.
I know this might not have been in our agenda, but speaking of paying off mortgage, ain't a decreasing term policy capable of doing that?
So a decrease in term policy is typically what they call, it is a decrease in term. So that's usually assigned to a mortgage, right? So that is mortgage protection or mortgage insurance. But here's a reality. It's much better to own a full term policy, because as that term decreases with the value of that home, well, the premiums don't decrease. So you continue to pay the same premiums while you get the least amount of insurance coverage. So you may as well go ahead and own a greater amount for term insurance. So it's one of those things that you just really have to sit down and analyze. I mean, I've got clients that, Francisco, I got this letter in the mail and they told me I can get insurance on the house in case such and such dies and it can be paid off. Yeah, you can buy that, or I can offer you this term policy.
Right.
And you're gonna get paid a whole lot more if something should happen. And here's the thing: we don't want our loved ones to die. We don't.
Yeah,
right?
not at all.
But we also understand that in this world right now, death is inevitable.
Yeah.
So we got to make sure we can take care of that.
It's something you can't avoid, man. Y'all gotta prepare for that, because
Absolutely.
anything can happen. And when it happened, you don't want to not be prepared for it, man. Especially if you have kids, and there's a lot of people.
Yes.
Majority of us have kids, man. And I say this all the time. If you have kids and you don't think about the future of your child, then you probably shouldn't even be having them. You know,
That's real talk right
I
there.
said that in one of my videos on IG, man, and this is real life, y'all. I didn't bring this man on here for no reason. I brought him on here because I know he finna spit that game to y'all and tell y'all and tell y'all how to get y'all finances right as far as you and the people around you.
Well, this will be a great conversation. I promise you that. We just not gonna get all of that in one episode.
Oh yeah, definitely not one episode. We're gonna have to chop this one up.
This will be a series of conversations, and also too, just keeping in mind, one of the things I'm really excited about, Cortavian, is the fact that you and I have gotten to know each other, and I've gotten a chance to work with you in some of the things with your financial goals. But now we took it a step further. Now you actually came on board in the business as well. And so now you've also recently become a licensed financial professional.
Yeah, look, just dropped the bomb.
And so literally, we're going to be moving you through a series of processes to make sure that the folks in your world you can help and take care of properly, right? And so, there's so much to learn, and I'm excited to work with you in that capacity.
Man,
so I just want to share that with you,
man,
right?
Appreciate you, bro.
All day, bro, because we got work to do, and it's going to be fun.
Yeah.
It is work, though, because all the years that I've been in this industry, I never expected that anything was going to be given to me. I recognized that I had to put the hours in to learn the content of the material of everything I do.
And one thing I like about when I am talking to you, because one thing when you talking to somebody about a certain topic or a particular topic, and they don't stumble on their words, this guy know what he's talking about. And that's one thing I appreciate you for. Even when I first met you and you was teaching me about just the products that can change my situation, you actually knew what you were saying, which sold me on, I need to work with this guy. On top of, you was another brother. You know what I'm saying? I knew he was gonna have my best interest at heart.
Right.
So man, so moving into what would be, if somebody wanted to start to protect their finances, how could they move into doing that?
Well, so first off, one of the key things that we do first is we actually sit down and educate folks. No different than what we did, right? In our conversation. I sat down and I talked to you about the 3 rules of money, 3 concepts, and we broke them all down. And so the first rule we talked about was the rule of 72, compounding interest. So anybody and everybody in your listening audience, I would highly recommend Google the rule of 72, right? And then the next area is simply, how does money actually grow? And we talked about the 3 areas or the 3 ways money can grow, whether it's a fixed or variable or what we call indexed, right? And those are 3 different strategies to having your money grow over time. So keep this in mind, whether you're an entrepreneur or an employee, your money should be working 10 times, 100 times harder than you.
That's a fact.
24 hours a day, 7 days a week. Money don't sleep. It don't ask for no vacations. It don't get sick. It don't get tired. It don't have no attitude. It's just green, bro.
Yeah.
It's just green, right? And so, so your money really should be and needs to be working for you. And then the third area is taxes. Here's the reality. Many folks get up and go to work every single day. Many in this country are W-2s. And that means that, you have your taxes taken out of your payroll check. And you pay the federal tax, the state tax, the FICA tax, the Social Security tax, and all the different taxes. Man, all them folks get paid before you do.
That's a fact, man.
Right? And so what you walk home with, there's a difference between the gross and the net, right? And unfortunately, most folks are getting taxed and not understanding how the tax system works. So that's a key area where we'll spend time educating, right? So when we talk about the areas of what I call tax now, that's the first column. We talk about interest that you earn on your accounts. Uncle Sam gets a piece of that right away. And then we talk about what we call tax later or tax deferred. What is that? Oh, who got a 401k or an IRA, right? Yeah. Those are all tax deferrals, right? In the tax code. 401 Section K is a tax code. That's all it is, right? So you go to IRC 401 Section K. That's it. And that's the coin phrase. And most people don't even realize how and when the 401k was actually developed. And there's a history behind that.
Man, if you could, can you summarize? Is
I
it a
can
lot?
summarize it. I can tell you
Man,
right now that
let
the
me hear that one.
401k was developed in the late 70s, and it was primarily put together for high income earners. So generally presidents and executives of companies, in order for them to defer compensation for tax purposes. And so the IRS simply said, hey, listen, if it's good for you, it's good for everybody else. So then that became the thing that companies began doing and giving it to all the employees. And so what that ended up doing is pushing out the other benefit, which was the pension. So that's why you have 17% of the companies today, less than 17% of the companies today have pensions, right? So which was that guaranteed income in the future. And by the way, a pension by definition is really an annuity, which is a long-term income payout.
So is a pension something that people should go for? Or?
Well, if a pension is available, they should have it. No doubt about it, because it guarantees a stream of income.
Right.
But nowadays, guess what? As a financial professional, we can actually help people create that type of stream of income, even today. So if a person's got a 401k, it's really important to sit down and talk with a financial professional, i.e. us. And so we can give them the details of what they need to do to make that transition. And so keep in mind, though, a 401k is taxable, right? Taxable in the future. Now you got two versions of a 401k. Now you got the regular 401k, and then you got the Roth component of a 401k, which means it's after-tax dollars that goes in it. And so when it's time to distribute out, you don't pay taxes on it.
Is you talking about rolling it?
No, that's even before you ever roll it over. That's just the Roth component of the 401k. And so again, this podcast, we're not going to get through all of the details, but at least just kind of whet the appetite. So you reach out to us, we can have conversation, we can see what we can do to put some stuff together for you. And then the third column, when it comes to tax, is what we call tax advantage. So tax advantage simply means that you can put your money in an account, let's say a 7702 plan or a Roth IRA. You put your money in the account after tax, and then all the gains that takes place on that money is no longer taxable, according to the IRS. And so you really need a financial professional to put those things in place for you. Now, is everybody going to qualify for a 7702? No.
So do you still have to wait till you're a certain age?
Oh, now you want to deal with you want 59 and a half. You want to know about that? Well, when we look at the tax advantage products, if you're dealing with a 7702 plan, you don't have to worry about age 59 and a half. You don't have to worry about taking money out by age 72 for RMDs, required minimum distributions. None of that is a concern. Whereas though with the Roth, you do have the 59 and a half concern, and then you also have to have the 5-year rule as well. But you don't have the 72 and a half RMD requirement with a Roth IRA. But it's definitely worth the conversation. So everybody's financial situation is going to be different. And so it's important to do a thorough evaluation of where you're at financially.
Man, that's my fault. It seems like I keep cutting you off, man. I'll be wanting to get it out before I lose it, man. It's the sad part is, man, a lot of us don't do a financial evaluation.
No. Can I tell you why?
Go ahead. Yeah,
most of us think that it costs a whole lot of money to do it, first off. I mean, just think about the middle class as a whole. Middle class as a whole has, shied away from sitting with a financial professional because of cost. And anything that costs, we tend to shy away with, period. Anybody.
They scared to invest in themselves, man. And
really, that's the number one investment a person can make.
Yeah.
Bet on yourself. Not enough people bet on themselves. It's always, it's too many times people are leaning on somebody else and for direction all the time. There's nothing wrong with that, but at some point you got to take responsibility and own it.
Right.
When you own it, now it's yours. You done bought it, right? So the way our firm works, first off, is we don't even charge a fee for a financial plan to sit down with a client.
Man.
So when you and I sit down, did I say, okay, now your fees, your cost is going to be?
Not at all.
Not at all, right?
No, you did that free of charge, man.
That's right.
You went through a full financial analysis, and we went through pretty much everything.
That's
everything. Right. And the thing about it is if if they gonna do a financial analysis with you, they can't hold back and feel embarrassed about anything. You got to really let this man know exactly what's going on in your financial life. And once he lay out that foundation and really lay out that plan as far as what you looking like financially, then that's when those recommendations can come along. But you only get the right recommendations when you don't hold back and actually allow him to enter your financial life. So we definitely gonna put your info in the description.
Absolutely, and just to kind of help people feel more comfortable too, just like sitting down with you, I didn't share your information with anyone else.
Right, yeah.
So the level of privacy is held, right? The commitment to a standard of protecting your information, it's held. We have an obligation in the industry to make sure that we protect and secure your information. So there's no way it's getting shared with anybody else. So that way you don't have to worry about, your cousins, your mothers, your brothers, your aunts, your uncles, or distant relatives or friends knowing what you're earning or how your finances really look, right?
Right.
Because here's the truth. If you're at a party and you're just kind of hanging out with everybody, you peel back the layers on everybody in that room, I promise you, if it's 100 people in a room, roughly about 39 people have $1,000 in their account.
Damn, I like that analogy.
No, seriously, right?
Peel back the layers.
Peel back the layers. About 39 people in that one room got $1,000 to cover an emergency, statistically.
Yeah.
So most people walking around looking like they got something going on ain't got a whole lot. I don't care if you're driving a Mercedes Benz, if you're driving an Audi, or if you wearing the newest, latest Jordans and you got your iPhone and the latest phone, probably broke. Or at least 3 months or 6 months away from a bankruptcy, turning that car in, losing your apartment or losing your house. Most people have not been cash heavy. The pandemic proved that out. Most
Facts.
people are very illiquid.
Facts.
They don't have enough cash on hand. 6 months, 12 months of emergency money, forget about it.
And they don't even know. Oh, that's a fire topic, man. We're gonna go ahead and coat the room red real quick.
All right, here we go.
Man, the emergency fund, man. I'm not sure if that was in the agenda.
Now, it wasn't, but it flows through.
Man, look, the COVID-19 also proved that don't nobody have an emergency fund set up, man. When that COVID-19 happened, people began to panic because they didn't know what they was gonna do. They was losing jobs.
Left and
they
right.
didn't know how they was gonna pay their bills.
They had to stay home. Couldn't
You
go earn no money because they working hourly.
Yeah, you depending on somebody else to pay you money, right? And then they didn't have no emergency fund set up to where they can go to get instant money to be able to pay those expenses.
That's right.
Right?
And so take that for a moment and run with it, right? So if they didn't have the emergency funds, where did they get the emergency money? Let me give you a list. Here's some financial products that most folks are familiar with. It's called loans. A loan or a credit card is a bridge to the next payday.
Oh, yeah.
Right?
Yeah.
So it allows you to cross the bridge to the next payday. You say, I'm going to pay them later.
Yeah.
Right? As soon as I get it, I'm going to pay you back. Well, here's the truth. Why do you think an auto loan can go 48, 60, 72, 84 months? Right?
Right.
It's trying to give you something that you really can't even afford yet. But you're getting it right now sometimes because you just want it, and other times you need it, and now they're going to take advantage of you because of those interest rates. By the way, with an auto loan, why would you finance, remember this, a depreciating asset?
Facts, man. Hey, y'all, listen to that, man. Why would you finance a depreciating asset, man? Those are facts.
So it's not gaining in value. So flip the script, right? You think about loans, like a student loan. Why do our people have the tendency of starting off in a deficit when it comes to building wealth? Man. It's them student loans.
Man,
they're holding folks back.
I can honestly say that was my biggest mistake that I ever made. Was going, you know what I'm saying? We ain't even gonna go into that topic, but yeah, go ahead.
I mean, we can run with this all day, right?
Yeah.
And so what I'm simply highlighting is that most folks are buying products that they don't realize are actual products, right? So a home loan, gonna give you a 30-year mortgage. Now they moved that bad boy to a 40-year mortgage.
Damn.
Conveniently, we're going to let you pay for 40 years. So you're going to pay the house not 2 times, not 3 times, but 4 times.
When they changed that to?
They changed that a few years ago.
Oh, man.
It allowed you to do a 40-year mortgage, right? And then you look at, and unfortunately in the black community, there's a tendency to be more of these than regular financial institutions, and that tends to be payday loans, right? And so that means that a lot of folks are getting gouged financially. When you're looking at not 10% interest rates, you're looking at 10 times that or more, right? And you're giving away money. It's like literally free money to them. And you're in this constant cycle of paying this bill. So why am I bringing this up? During the pandemic, this is what people did, right? These are the things that were done. So you end up coming out with more debt than you went in with, right? And then also, too, credit cards got leveraged to the hill, right? And so now it's a heavy weight for a lot of folks to pay off. Again, these are financial products. And then again, just to kind of look like rock stars, unfortunately, what people want to look like these days in terms of, I got it all, my life is good. Is it really that good? Because if you just financed your furniture for your new apartment, and then you got your jewelry all financed,
TVs
right?
that you don't need.
Yeah, TVs. Some people got like 5 to 6 TVs in their house.
Man, do you know, man, what was the
They
name?
gonna watch all of them.
What was the name of the refund that people was getting during the pandemic? The stimulus.
Oh yeah, what they say on TikTok and all of that? They said stimmy. I got my stimmy.
Yeah.
I'm like, oh my gosh.
They got their stimmy back.
They got their stimmy back, so they go get some lobster tails.
And what I would have did was I would have invested that stimmy. I made sure it was a very thought out investment.
Yeah.
But I would invest it because people got like 2 or 3 of them back. Some people, majority of them with kids they even got money back for their kids.
Exactly.
I would have invested that stimulus check, or the right thing to do was to make sure your bills was paid up.
That's right. It's hard to be. There's a scriptural principle that talks about iron sharpens iron, right? And so, if you're not around, it's been said that if you're in a group of 5 people and you're the smartest one in that group, you got to go change your group of association.
That's a fact.
I'd rather be at the bottom of the group because I need to be learning from those people that I'm around.
That's a fact.
That's the key. And so you don't ever want to be the smartest person in your group.
That is a fact.
And so it comes back to the whole thing too about being around people your age. So if you associate with people your age, you tend to go learn or pick up what you already know from them, unless they went and got some schooling from somebody else, and bringing that wisdom back, and dropping them nuggets. So I'll leave with this, because there's a lot that we could talk about, but I like to talk about the 3 S's, and I share this with people all the time. Most people exist in one of the 3, or they've experienced all 3. The 3 S's is the survival stage. Most people never leave the survival stage. It's literally go to work to eat. And if somebody needs something, you ain't got it. You ain't got it. You move on from survival to a stage where you can save, right? And I recommend that everybody on some level save minimally 10% of their income.
That's a fact.
On a monthly basis, because I'm always reaching up for that 25%, but minimally 10%, otherwise you're going to stay broke for the rest of your life.
That is a fact.
And when you can save, you can move on to that stage where you can serve others. You shouldn't be in a space where it's self-serving, right?
Like that.
So it's about giving. And so I believe that the persons that are givers are the ones that get more back.
Man, can I get that from you before you leave?
You got it recorded, bro. So really be a giver, because think about this. I got a closed fist right here. Can you give with a closed fist? Can you receive with a closed fist? It's only until you open it that you get the benefit of both.
Right. Ooh, I like
That's
that.
it. That's really what it comes down to. So when I work with people, I look at it this way. I look at it as an opportunity to give, right? Do I make compensation on it? Absolutely. But that's not what it's about. What it's about is making sure that person can elevate, become empowered, and move forward. That's really what this is about. Empowering folks and elevating to the next level, because, to make $100,000, it's not a difficult task. You just have to be at $48 an hour.
Yeah, but it ain't an easy task.
Yeah, it ain't an easy task. How many jobs paying you $48 an hour?
None.
We can talk about that the next time.
Yeah.
But, I'll leave with this. Grant Cardone said, "Success is not optional."
Go.
Yeah,
Yeah.
right. Success is not optional; it's an obligation. And too many people treat it as casual, so they end up becoming casualties. So real talk. I mean, the reality is that to become successful, as your podcast describes, it takes a whole different mindset. It takes different thinking. It takes a whole different education. You can't employ an employee mentality to that of a becoming wealthy mentality.
This is a fact, y'all.
So
you have to want to be free in order to become free.
absolutely.
You know? Yeah, definitely, man. Man, I know we honestly, man, we probably can go on all night about
Man,
this.
we could. This is so easy to do.
Yeah, this I like this topic because I'm in the financial literacy heavy, man. So I definitely enjoyed this one right here, man.
Well, there's all kind of books and things that we could share, and next time we have a conversation, we can put that together too.
Man, my boy done left me hanging, man. Man, appreciate you for coming.
Oh, bro, I'm not even paying attention.
Man, appreciate you for coming through to the Think Successfully room, Francisco. Man, it's always
Appreciate it.
exciting to have these type of because these are topics that instead of when we have dinner at a dinner table, instead of everybody being on their cellular device, don't nobody ask how your day went. Don't nobody ask or have conversations about finances just on a daily basis on the household no more. So anytime I come together with somebody and able to discuss finances, man, it's always exciting to me. So man, this was definitely another successful episode of the Think Successfully room. So we're gonna go ahead and close this out today, y'all. Man, life is good. Life is wonderful. Be blessed to be alive. Self-sufficiency is how you survive. To the kings and queens, to the guys and goddess, forever and always, think successfully. Yeah.